So last week, the Federal Reserve cut rates. Every day since then, these things have been going up. But today, we got a report on the jobs numbers. Now, the reason why the Federal Reserve cut rates last time was jobs. Okay, so the headlines today, let's scroll over to it. Job cuts in October hit the highest level for the month in 22 years. So could this data actually force the Fed to cut? That's what we're going to talk about in today's video, folks. Because if you're watching me, you're most likely a homeowner, a home buyer with that question, Dan, what in the heck's going on with those and why? So in today's video, here's what we're going to talk about: jobs. The reason why the Fed cut rates the first time was jobs. Now with this number, what are they going to do? So let's read the fine print down here. Job cuts for October totaled 153,000, at 183% surge from September and 175% higher than the same month a year ago. So hopefully this should be the catalyst that pushes the Federal Reserve to multiple rate cuts, especially in the December rate cuts. That's what you would assume. So let's get over to see why. Okay, so if you're new to my channel, we focus in on mortgage rates and the whys behind it. A lot of the financial data is right through here on your screen. This is what the Federal Reserve looks at. Okay, the Federal Reserve controls that rate right over there. It's the federal funds rate. Right now, it's 3.75 to 4%. Remember that because it's going to come later. This right here is the inflation number they look at. It's the PCE. They're not worried about this right now. Now they're worried, but they're not putting that to the forefront. What are they putting to the forefront? Right through here, the jobs numbers. They're saying the jobs reports that we're getting, or at least the smoke that we're getting from the markets right now, isn't painting a very good picture. Well, today's headlines actually solidified that. So now what's happening in the bond market, because that's what we really focus in on my channel to figure out what's going on with mortgage rates, it's right through here. So what you're seeing on your screen, if you're new to my channel, is a mortgage bond. Okay, this bond right through here, it is up 29 ticks for the day. What this means, in a nutshell, this is the price of a bond. If the price of the bond goes up on a mortgage, that means the yield or the rate goes down. Okay, so there's an inverse relationship. So number goes up, the rates come down. That's basically the easiest way to explain it. The bigger the number, the bigger the adjustment. So right now we're up about 30 ticks. That should bring rates back down to about 6.2 handle, or at least the high 6.2s. I've been calling a 6.375 as the high threshold of the markets. I'm saying 5.875 is the low mark, and 6.375 is the high mark. So if you're a homeowner out there, you're trying to track these things, because the last few days I've been getting a lot of texts from people saying, Dan, it looks like I missed it. Well, if you're a homeowner, check out one of the tools we have. Okay, so I created the RateWatch tool right up through there for homeowners. Let me know what interest rate you'd be interested in refinancing. And when the rate hits that, I'll reach out to you. We'll go over what your payment would be, what the cost would be, and what your break-even point would be. You can just do it there. I don't sell the data. I'll be the one reaching out to you personally in most cases. If you're a home buyer, I got some information for you as well. There's even a product down here that'll give you up to $7,000 in down payment assistance. But here's what I want to help you guys understand today. Mortgage rates. Okay, so here's where mortgage rates are. If you ever Googled what are mortgage rates, here's what you're going to get on your screen. Okay, and I just want to clarify this, and then we'll go back over to see where mortgage rates are going today and what this should do, the bad news on the economy should do to rates. But have you ever figured out or tried to dissect what are rates today? So you Google and you go out there and say, okay, what's today's 30-year fixed? Well, this is what you're most likely going to get. Okay, it gets really confusing. Like up here, bank rate has a rate at 6.25. We go over to Zillow. Zillow has a rate at 6.125. You go to Redfin, they're at 6.6. Why would you call Redfin? They're the highest up there. Are they? What's the parameters behind this versus the one over here? Well, it doesn't really tell you. You have to read the fine print. But you have to remember, folks, all this is marketing. Okay, so this one might be, higher fees than this one and so forth. So please understand how mortgage rates work, and that's why we provide this channel. Subscribe over there so you can, every time I post a video, you can get an alert and you can understand how all this works. But let's get over here. Here's where the bond market's going up. That means that's good news for mortgage rates. You go over to the markets, they're not doing too well today because this is painting not a very good picture of the economy right now. You're starting to have earnings, they're doing pretty well, but some are starting to crack, especially on those on the consumer level where the consumer is making maybe less than $100,000. McDonald's, Taco Bell, companies like that, they're not faring very well right now. So when you have this dismal jobs report, that's even going to add pressure to those. So we go over to the FedWatch tool. This is where we really want to focus in on what does these numbers Are they going to sway what the Federal Reserve does in the future? Well, probably not just yet because that was just published today, but you have to understand how this works. At the last meeting, what you're looking at right here, this is the probability of where the Federal Reserve rates are going to be at the next meeting. So at the December meeting, they're saying the federal funds rate, most likely a 67% chance, is going to be at 3.5 to 3.75. Well, currently it's 3.75 to 4. So that means there's 67% chance the Federal Reserve will cut rates at the December meeting. Well, the bad news is this was about 95% the day the Federal Reserve cut. So that's why the markets expected multiple rate cuts. Well, what's been happening ever since that is this number keeps deteriorating, and that's why mortgage rates and the bond market's moving in the wrong direction. So mortgage rates have been going up ever since the Federal Reserve cut, but could today's numbers actually help in that direction? So if you're looking to buy, please reach out to us. We'd love to help you. I'll show you my website once again. If you're looking to buy, here's what I'd suggest you do. Schedule a consultation with us. What we're going to do is make sure you're in the right product. And then we have this slogan that I have. It's one application, one credit pool. We're going to compare your loan with over 30 different lenders. How do we do that? Well, it's pretty intriguing. The bank I'm at is set up with over 30 other lenders. These are banks, credit unions, mortgage companies to be able to provide their rates, their products, basically their services to you. One of the products we offer is up to $7,000 in down payment assistance. If you're a home buyer, check this out. It's not only for first-time home buyers. If you're a homeowner, want me to track rates for you? Just go to the RateWatch tool right through here. Now, if you've already got a quote and you're like, Dan, can you help me with this? Can you look at my quote and make sure I'm getting a good deal? Well, just upload it to the loan estimate review. What we're going to do is we'll do a review for you. We'll send it back in video form, and we're going to break down everything. We're going to show you exactly what rate you're going to get. We'll show you exactly what your fees are going to be. And hopefully, if we can save you on fees and rate versus what you're getting, we can win you as a customer. So folks, today, here's my expectations. Rates are going to come down. We might see a 6.3 or 6.29 handle by the end of the day. But what do you do? We're helping those out there that are homeowners. What do you do if you're looking to buy? Okay, we crossed this a minute ago, but let's do this. Go to the rate update and check out a few of the tools we have. We have right here, Ask Dan. This is a tool that we've created just not too long ago for you to ask me a question directly. So click this, let me know what that question is, and I'll personally be the one responding back to you. But the biggest thing I could ask you to do, request an appointment. What we're going to do is we're just going to go through and we're going to do a consultation with you. It's free. It'll last about 15, 20 minutes, making sure we're on the same page. What's your budget? What's your credit scores? How much money do you have as down payment? Then we're going to exhaust all your loan programs available to you. Also with rates and fees, make sure we break it down so you understand it, making sure we get you in the exact program that you qualify for. So that's what we can help you out. So hopefully now, after 5 or 10 minutes video, you can understand a little bit more of what the heck's going on with those and the whys behind it. Thanks for watching, folks. If you're new to my channel, love for you to subscribe. If you're a homeowner, home buyer, realtor, even loan officers, I'd love to have you join my channel so I can help explain to you guys and you can help explain to your clients what the heck's going on with those and the whys behind it. Thanks for watching, folks. I'll see you at the closing bell later today. Bye-bye.